and thank you for joining us. I'm pleased today to release the 2014-15 fall update. I just want to take a few moments to acknowledge, though, the fact that we took some extra time this year. We wanted to make sure that we had as good as possible and as reliable as possible information that we had available to us, given the volatility in oil prices particularly, and the significant changes that we've seen unfold, especially since the end of November. Changes started to occur much earlier than that, but since the end of November, after OPEC met, we've seen a lot of ups and downs. So I just wanted to make sure that we had all the necessary information that we needed to have as clear a picture as we possibly could. While, in fact, there's been a lot of uncertainty around that, we remain buoyed by the evidence that the economy still remains pretty robust in Newfoundland and Labrador. The investments that we have made in the last 10 years have brought us to a stage in this province which I believe will help us meet the current challenges that Newfoundlanders and Labradorians will face. And I'll make some comments about that a little later on as we go. But I want to now just walk us through the profile of the financial position that we find ourselves in. And this gives us the immediate picture. 2014-15 budget deficit is expected to be $378 million, $378.2 million higher than we forecasted on budget day. There's a projected $678 million decline in revenues. That's partially offset by a $300.5 million decline in our net expenses. This offset came about as a result of a number of things. One was the Premier's decision on November the 27th to stop all discretionary spending and calling for a greater scrutiny in the hiring process across departments, and also from some of the pension and other post-employment benefits, and the savings from that raised in about $157.7 million. And these, you recall, were debated in the House last week. Specifically, lower interest rates as well. Costs were less due to the decrease in our liabilities and our current service cost. The decline in total revenue is due primarily to the offshore royalties. Oil revenues, assumptions that we will talk about a little later on, how we got to be where we are. The decline in the offshore royalty is primarily due to the lower oil prices. In addition, this year we experienced lower production, and the average price of oil for this year will be, we are forecasting to be 86.49 cents U.S. versus the 105 U.S. at budget time. There's been an increase in personal income tax due obviously to higher personal incomes, and there was a tax adjustment. Revenue Canada collects our revenues for us from taxation, and there was a higher yield than we had forecasted and budgeted for in 2013, so there's been an adjustment as a result of that. And so we've got higher personal income tax this year than we had originally built into our forecast. There's also an increase in sales tax, and that's, again, primarily due to increased consumer spending, obviously a reflection of consumer confidence, but also, too, it's a reflection of the higher weekly earnings that Newfoundlanders and Labradorians are now enjoying compared to 10 years ago. There's also been an increase, an adjustment in the corporate income tax. We saw a significant increase in some sectors of corporate income tax where we had a gain of some $14.2 million, and then we had some offset because of some changes in the offshore corporate sector. And so we netted out. As you can see here, there's a net gain on the corporate tax of $6.8 million. Also, we're seeing an increase in mining tax, primarily coming from Voisey's Bay. Also, we've seen some slight increases in the Canada Health transfers, and these are services or transfers from the federal government that help offset some of our social programs. One of the other areas that's impacted this year's revenue forecast has to do with a dip in the revenue forecast from Nalcor. We bring our Nalcor's net income into our budget forecasting, and that's down to $91.2 million from a forecast of $1.8. So all in all, this gives you a forecast and a profile of where we've seen the gains and losses in our revenue stream. As you can see, the big number is the offshore royalty. As a result of the dip in prices, It's a reduction of some $791.7 million on this year's budget. Now let's look at what's given rise to this huge change for us. And this is a graph that shows you what's happened with Brent since we developed our budget. We developed a budget, as you recall, based on 105 U.S. And at that time, many of you have commented about whether or not that was good or bad. But at that time, based on solid advice that we were given, that was a real good number. No one could have expected and forecast what's happened since that time. But if you see this chart, you can see here in the early part of the fiscal year, our forecast was really solid. In fact, on an average, because with this number of 105 is a forecast of average. And if you consider where we were in April 1st of this year, the first day of the fiscal year, up until the first part of October, that number was a solid number on average, because we had the bump in the first part of the year. It wasn't until midsummer that the prices started to dip, and we had the benefit of having the higher prices in the first part of the year. So we really got ourselves to the first part of October when that 105 average was a solid number. And the experience since then obviously has been tremendous. But you can see the real sharp change that occurred as we got into September and onward up to today. Many of the comments that I made as well talked about the delay in wanting to make sure we did this when we were better informed came about as a result of OPEC's meeting in the end of October. There was a lot of speculation about what would happen when the OPEC countries met, whether they would adjust their production forecast. And as we all know now, they decided that they weren't going to adjust their forecast. So this shows a sharp but a steady pace of decline. After OPEC met in the end of November, you can see here where the things started to get very erratic. And we've been tracking this daily. And you can see here where there's been up and down at any given day. We developed our forecast, and for the discussion today, which I'll share with you in a moment what we're using as a forecast number, but we developed these forecasts over the weekend. Woke up this morning to find that Brent was now down below 60. Wake up tomorrow morning and it'll be something a very different figure. And you can see here the pattern. It's been in any given 24-hour period, it's up and down, but it's on a trajectory of being on decline. We've seen some, in the last couple of days, we've seen a few changes upwardly, but you can see this has been a difficult time to try to forecast. Some of you are asking me to do this update last week. So if I had picked a number from last week, this is the information that would have informed me. So if I had picked a number last week, it would have been a very different discussion than we're having today. If I were to have this discussion in 2 weeks' time, this graph might look very different again. So the challenge is when you have volatility like we're experiencing is landing on a number. And that's the challenge that we're running into. But here's the assumptions that we've made. And to help inform that discussion is we looked at some of the sources that we've historically looked to. And in recent past, a lot of agencies have been doing a lot of speculation, but seldom are they prepared to give you a firm position on what it is they think it will be by the end of the year. But we did have several reference points that we wanted to look at as we looked at those. Obviously, we looked at information that we got from NALCOR. We looked at information we got from the board. We looked at the current market, what was happening in OPEC. So we've seen some significant changes during that period of time. And so here's the oil assumptions that we've made. When we started off the year, we had said at that time that we were going to have a $2.398 million budget. That was our revenue stream from offshore oil revenues. We've now decreased that number by $792 million. Our now revised forecast is 1.66. You can see that the total production is down from our original forecast as well. The average price of oil for 2014-15 is estimated to be at $86.49 a barrel with an exchange rate forecast of 0.8937. Now that compares to budget time. And in budget time we use the figure of 105 US, together with an exchange rate of 0.9125. So you can see now where we made the changes. We've got some, as this graph would indicate to you, you can see we're from April to November, what the averages were. And you can see how we've made the adjustment for the period from December through to March, and what that gives us for a fiscal year average. And one of the things that I'll just comment on with respect to the averages, as we see changes in the next several days and weeks and months ahead of us, on any given day you might see oil up and down. What we're forecasting here is using an average. We acknowledge that any given day the number might be slightly different. It might be slightly higher, it might be slightly lower. But what we're forecasting is that for the rest, on average, for the rest of this year, we believe that oil will be, and we're using a number of $63 a barrel. Today it's 59, a few days ago it was 62, but we're forecasting out to the end of March 31st, and we're using an average. So at any given day between now and the end of March, it might be lower than that number and it might be higher, but that's what we're using as an average. Just to give you, and again, you know, and I caution everybody that there's still a high degree of volatility, and a lot of changes can occur in any given period of time. And we're not reached a point where we have a lot of certainty at this particular juncture. So what we've done is we've done a sensitivity analysis. We've got 3.5 months left in this year, and so it's a shorter period of time. Allows us to be able to do a sensitivity analysis that may find ourselves more useful because it's a shorter period of time and the span is slightly shorter. But here are some of the sensitivities that we've done. We've looked at what would happen if oil changes, price of oil change, or exchange rates change. So again, at the beginning of the year, you might recall when the budget was delivered, we said that changes in prices of oil over if that average had changed for a full 12 months, it would have had a difference. $1 a barrel would have made a difference of about $30 million in our revenue stream. But now for the remaining part of this year, if the averages change based on the averages that we're forecasting, and again I'm using averages, if the averages change by $1 downward in the price of a barrel, we lose $9 million. If the number changes, the average again, if that average of 63 that we're forecasting to the end of the year changes and it drops, we lose 9. If it goes up to 64, then we gain $9 million. And the same thing with the exchange rate forecast. Forecast of exchange rates, if that changes by a cent, if it drops a cent, we gain $7 million. If the exchange rate goes up, again on average, above what we're forecasting, we'll lose $7 million. So we now have run the sensitivity analysis to give us on an ongoing basis, as numbers start to change, we can start modeling what our average might look like. But based on the assumptions we're making today, based on the best information we have available to us, based on those people we're talking to about who understand this industry, first of all, they'll tell you there's still a tremendous amount of volatility and there's still a tremendous amount of uncertainty. However, despite that, we looked at the information that's available to us, and that 63 number is, we believe, is a number that's reasonable to forecast where we will be to the end of the year. But we wanted to do this sensitivity analysis to ensure that we had a clear understanding and an ability to adjust if necessary and reflect new realities in our forecast before we get to the end of the year. In terms of the overall impact of what this might do to us as a province, what this might do to us as a government, and there's two things I just wanted to separate here in the discussion. One is that Newfoundland and Labrador still has a strong economic performance. The forecast for economic performance next year is still sound. This is still an attractive place to do business. It's still an attractive place to invest, and people still want to come here and to invest their money, and there's still tremendous opportunities here. Separating that from the position that the provincial government finds itself in the Treasury itself. This year we're going to have a deficit that's much larger than we had forecasted for one reason, and that reason is oil. And it's something we have zero control over. We're able to control our expenses, which you've seen, that we've made significant efforts to reduce the expenditure levels for this year, and we'll continue to do that. But the price of oil, we have very little control of that. In terms of, the position that we find ourselves in today, we talk about how much money the province owes and the kind of debt that it has. This graph here shows you the gross debt. This is the dollar amount that we owe the banks. If you walked into your bank tomorrow and said, I want to pay off every cent that I owe you, what would it be? Well, if we walked into our lenders tomorrow and said, we want to pay off every cent that we owe you, this is what it would be. This is how much money we owe today. And so you can see there's been a huge decline in the amount of debt that we owe banks. The last time we had to go to the banks to borrow for operations was back in 2004. The last time we had to go to the bank to borrow some money to invest in the pension plan was in 2008. So we've had a significant reduction in the debt that we owe creditors. And this is the figure here. The other figure there's been lots of discussion around is net debt. And this is a reflection of the total assets that we have as a government, buildings and cash and everything else that we own, less any liabilities that we have. And this is another figure that gets tossed around a lot. This figure has been, as a result of this year's deficit, will grow incrementally to reflect the growth in that deficit. Just to speak again, and this is a reflection of, I think, and I want to talk a little bit about the economy of Newfoundland and Labrador. These are some significant economic indicators. Not questioning at all that as a provincial government, we have some fiscal challenges ahead of us to rebalance our books and to forecast a return to surplus and adjust our targets for return to surplus. But economically, we're still strong, as I said a moment ago. And I just want to make that separation because the economy remains still really robust. We need to recognize, obviously, the reality of the lower revenue stream, but also be cognizant of the role the government plays in the provincial economy and continue to encourage growth. Our economy is moving along very well and continues to demonstrate tremendous capacity for growth. The truth is, we've come a long way, and we have a great story to tell about the economy of Newfoundland and Labrador. Newfoundland and Labrador has made tremendous economic progress since 2003. I just mapped some of that out for you. Driven significantly by investment, which is up over 230% since 2003. Since then, real GDP is up by 13.5%. Employment is up by 7.7%. And the unemployment rate has fallen by 4.1 percentage points. And there's been some erosion in those indicators in 2014, but employment growth combined with strong wage gains has increased household income by over 80%. And as a result, we see benefits in retail sales, purchase of cars, homes. There's also been an increase in that retail sales sector itself, has seen an increase of some 55% over the same period of time. The stronger growth in disposable income compared to income is due to some of the cuts that the federal and provincial personal income tax rates have had over the same period of time. People have more money in their hands today than they had before. Today, while we deal with the impact of low oil prices, it's important to remember, though, that the long-term view for oil and gas exploration and development in Newfoundland and Labrador is still strong. And obviously that, for those of us who've been following the news in recent past, that was very evident in last week when the call for bids for the Flemish Pass Basin fetched us $599 million, a commitment to the exploration by ExxonMobil Canada, Suncor Energy, and ConocoPhillips Canada, the single largest bid for a single parcel of land in our province's history. Statoil has demonstrated its commitment to the province's offshore as they actively carry out exploration in the Flemish Pass Basin. This exploration is occurring near the Bay du Nord, which was announced in August of 2013 and was the world's largest conventional oil discovery in that year and the largest the Statoil-operated discovery outside of Norway. This level of investment speaks to the long-term sustainability of our offshore and the industry's confidence in the province's prospective regions. And that's an important factor, I believe. There's a tremendous confidence by the oil industry in the opportunities and the prospects that are here in Newfoundland and Labrador. Through sound fiscal management and responsible decisions, our government will continue to work to strengthen the business environment, encourage development of innovative industries, to diversify our economy. A key component to diversifying the economy is Muskrat Falls Project, an investment in our province's future. We continue to demonstrate our commitment to strong fiscal management, the responsible decisions that we make today, and our sustainability plan for the coming years will protect the financial position of our province and secure a bright future for today and future generations. I want to quote President John Kennedy once said that change is the law of life, and all those who only look to the past or to the present are certain to miss the future, and we don't want to do that. Today, as we grapple with some of the profound changes that we have to make and adjust our strategies accordingly, we do this with the knowledge that as we approach 2015, the future of Newfoundland and Labrador remains very bright. In closing, though, I want to acknowledge the tremendous work by the officials in the Department of Finance who've worked very diligently over the last while, and as I said in my introductory comments, we decided to do this update over the course of the weekend, so they've been feverishly, while I was attending finance ministers' meetings from across the country, they were feverishly working on putting this together, and I want to thank the two officials who are with me today and their staff for the tremendous amount of work that they've done in putting this together and being able to, and continuously monitoring and evaluating the changes that have been occurring under our feet as we've been preparing for this update.